Hello, I'm James George, and this is Alex Peters, and it is our market report, this time for October 2021. How are you, Alex?
I'm doing great, James. Thanks for having me. How are you?
I am good. So tell us the news. What is happening with interest rates at the moment?
So interest rates are definitely on their way up. Markets closed today for a holiday, but pretty much every single day last week, I think 405 days that I came in, we get the rates come out, and it usually has an indication of it better or worse from the day prior. And every single day except for one, they were worse. So to quantify that, what does that mean? From last month, I would say they probably moved up from 1/8 to 1/4%. We're looking still in the low to mid threes. I can actually probably still get like very low threes on a conventional purchase with the right down payment, right property type, right credit score. But like your run-of-the-mill kind of credit and maybe lower down payments, you're going to start looking into the mid threes, 3.3, 3.5-ish. And then FHA, VAs, just still in the high twos. If you've got maybe poor credit, maybe in the low threes. Overall, rates are still low, but we've talked about all year they're going to start moving up. And we've had a couple times this year where they've started to do that and they've come back down again. This could be the start of them going up. They could come back down again, but I actually think they are going to keep going up. Reason being is the Fed is going to start tapering the amount that they're spending in the bond market. So at the beginning of the pandemic, the Fed was buying $50 to $100 billion per day in bonds to help subsidize the cost, keep them low, keep the rates low. That's a lot of money. And they've now decided in December, they're going to taper that possibly all the way down to zero, which means there'll be no Fed assistance. You're now just left with your retail and your bigger traders type thing doing the bond market. And I think if there's no government interference or intervention, I should say, trying to keep the price low, we could see an actual kind of a bounce up. That's my opinion, which is also based off of opinions of some experts out there. I guess time will tell. We've been wrong a lot the last 18 months.
We have. We keep saying interest rates are going to go up, but then just as you say, we've done it where they've crept up a little bit, they've dropped back down, they've crept up a little bit, they've dropped back down. This sounds like it's been the highest it's been since the beginning of, interest rates dropping though.
Yeah, I'd say so. February 2020, March 2020, we just saw a huge drop off in rates. And I think we're going to start going back to the levels of pre-February 2020 type thing. Again, I could be wrong. If you think that this is your last chance to do it, just come and get it done. We still have this great lock and shop program. We can lock you in at the rates today, and you can shop for up to a year, basically, with what the rates are today. And if they improve during that time, we just get you the better rate anyways. So if you want to hedge your bets, essentially, just reach out.
Well, I've brought this up before. I always feel that there might be this golden time to buy. Don't get me wrong, I think there's been times in the past that we didn't even realize were golden times because interest rates drop through the roof just before house prices rise. And, we worked with people last summer and we were like, you sure you want to buy right now? We don't know what's going to happen. They did. They got the really low interest rate and they got the house at a really good price, and house prices have risen. Sometimes it's 20%. From buying just 12, 15, 16 months ago. Yeah. But I'm seeing the market has definitely changed. But the funny thing is what we've also got to remember is the market changes this time of year anyway. So house prices in May are historically higher than what they're going to be in October because people need to often move for schools, and that is often a big thing which implicates so much to do with the market is the time of year when everyone needs to move for schools. And right now, coming up to the holiday period, people often aren't wanting to move house on Thanksgiving or Christmas, for example, right? So this time of year historically is quieter. We're not really going to know what is going to happen for the next few years, in my opinion, until next year. We're going to see what interest rates do. And then when we get to the boom period, the spring, if things go like that again and house prices rise dramatically, then we're probably going to see this like we do all the time, raise in the spring, drop slightly in the winter. So we're not going to know until then, but my gut has always been at some point things have got to change, and interest rates, in my opinion, will play a big part of that. Generally, as interest rates rise, house prices will fall slightly. But there is going to be that golden period where these interest rates are still small, the interest rate is still low, and house prices, you can start negotiating on them. And I think we could be around that period this winter. This could be a really good time to buy still, because you can get an interest rate in the low threes, but I'm telling you now, you can go out there and you can start negotiating on homes. Look, homes are now sitting. They are doing price reductions, and the perfect house priced right is still selling. They're still getting offers over asking price. But you can go out there, and especially if you can not go after the perfect home, because the perfect home for you is the perfect home for everyone else. If you can go after that home that does need the kitchen remodeling, that maybe is a little bit closer to a main road than you wanted, all those things that are putting other people off, you can get a deal right now and get the low interest rates. But it's one of those that the market will change at some point. Interest rates will rise. House prices, in my opinion, will fall at some point. Historically, house prices can never do that. They have to fall, and there will be peaks, and there will be times when they're down. So it's just one of those that it's depending on your situation. Get in touch. Alex is the guy to go to in regards to getting the loan. Just reach out to him. At this point, if you're not looking to buy until next summer, start chatting to Alex now about your loan. Start looking at your credit. If you have a low credit, there are stuff that Alex can help you do to get your credit score up so that you're ready for next year. There's some simple stuff that you can do. So I highly recommend getting in touch with Alex, even if you're looking 6 months, 12 months ahead.
Yep, absolutely. And once we run your credit, we don't have to send you to a credit repair specialist where it's going to cost money. If there's even something small you want some advice on, we have all the tools to do it ourselves. It's only like really big, giant cases, maybe like BKs and foreclosures where you might need credit repair, but I can do a lot of that information, advice giving for you without charging you anything. So feel free to reach out.
Great. Well, let's see what happens over this winter period. Let's see if interest rates keep rising, what's going to happen. It's going to be an interesting time, has been for the last 18 months. So thanks for joining us, Alex.
Cheers. Thanks, James. We'll talk to you next month.
Have a good one. Bye.
Thanks. Bye.